The third main actor in an economic system would be the government. The government is there to regulate and protect all main actors in an economic system. Government is the dominant actor in the economy and intervenes during market failure. We would look at market failure when we study the economic system in the next section in 1.10. For now, let's look at the role played by the government in the economic system. The first one would be establishing and enforcing the rules of the game for the producers. And also, the second one would be promoting competition, regulating monopolies, and producing public goods. A public good is that a good that is once produced is available for everyone to consume regardless of who pays and who doesn't. These goods normally doesn't bring enough profit, so the entrepreneur is not willing to make that decision of producing these goods. And the fifth one would be externality. An externality is a consequence of an economic activity experienced by unrelated third parties. It can be either positive or negative. Externalities occur in an economy when the production or consumption of a specific good impacts a third party that is not directly related to the production or consumption. Externalities such as pollution are one of the main reasons why governments step up or step in with increased regulation. So this is one of the major role played by the government. So as you can see, it protects all the main actors in an economic system. And then the sixth one would be income distribution. Government ensure that there is no significant income gap in a society or income inequality. So they impose tax policies. Now, if you look at the tax policies, there can be three ways that they can impose this tax. The first one would be the proportional tax or flat rate tax. The tax as a percentage of income remains constant as income increases. So it doesn't matter how much you earn, there is a flat rate or there is a percentage that is always taxed. And the second one would be progressive tax. So as the word implies itself, the tax as a percentage of income increases as income increases. And number three would be regressive tax. So the tax as a percentage of income decreases as income increases. So the tax would decrease when the income increases. So there are different ways in imposing tax. So they will look at the income distribution and impose the right tax policy to that economy. And also there is another role played by the government to actually achieve their macroeconomic objective, which can be full employment, price stability, or economic growth, which we will discuss in much more detail when we talk about macroeconomics. So the question is, government is a unique problem for economists, and what is their goal? Because it is clear that households wants to maximize their utility. So if you look at households, they maximize their utility. And if you talk about firms, they maximize their profits. But when we talk about government, it's really a tricky area, and economists have difference of opinion. It might be said that government officials maximize the number of votes they will get in the next election. They try to appeal to the masses in order to increase their popularity. Having said that, the real objective of government is there to protect all the actors in an economy. Market is based on voluntary exchange, so government decisions involve some degree of coercion to the market. So this is not actually bad, because when there is a market failure, there is a need for government to intervene and coerce the market to actually direct it towards to recover the market as quickly as possible. And also government revenue majorly comes from collecting taxes. As we can see, there are different types of tax policies that they impose, and this can be related to the bigger picture of social welfare and to also income distribution, inequality. But there will be always taxes, because that's where the government get their revenues. So this concludes the topic of main actors. We have also one additional video on the different mechanism, coordination mechanism among these sectors or among these actors, which will shape their economic system, which can be either market economy or command economy or mixed economy, which we will look at in the next video.